Hey, welcome back. It's Jason Walter here. Something completely unexpected happened last year as our economy tanked and our unemployment rate increased to double digits in 2 short months. Our housing market went absolutely bonkers. Compared to 1 year ago, home prices in the US have surged by almost 18%. But more recently, our housing market is showing signs of a potential slowdown. So in today's video, I'm going to be sharing 5 key trends that I'm personally tracking that indicate a shift in our US housing market. And of course, I'm going to be sharing the latest data to help support my conclusion regarding this. And towards the end of this video, I'm going to be sharing my personal opinion regarding if this slowdown is indicative of a long-term trend, such as a housing crash, or if it's a short-term one. And before we get started, please hit the like button. I greatly appreciate that because it helps support the growth of my YouTube channel, and it's my goal of reaching 50,000 subscribers by year end. And if you're looking to buy or sell a house from virtually anywhere in the US, then go to homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. The first trend that I'm going to be sharing today that indicates a housing market slowdown is due to the fact that we have a decrease of mortgage applications for home purchases. This is a graphic from the Mortgage News Daily, which pulls data from the Mortgage Bankers Association, or the MBA. So the light pink shaded area is a change in the MBA's purchase index. As you can see here, loan applications for home purchases have been more or less on a downward trajectory since mid-January of this year. And more recently, mortgage applications for home purchases are behind last year's numbers by 18%. A second sign that a real estate market may be slowing down is due to the fact that pending home sales have been declining. A pending home sale is when a home seller accepts an offer from a home buyer and a sales agreement is signed. According to the National Association of Realtors, or NAR, pending home sales decreased 1.8% in July and were 8.5% lower from 1 year ago. So in addition, all regions in the US experienced a dip of pending home sales from 1 year ago. Pendings have now decreased for 2 consecutive months. So what this could mean is that home sales could decrease in the next 1 to 2 months because it takes around a month from when an offer is accepted to when the home sale is finalized. NAR also recently posted that pending home sales have generally been trending downwards since March of this year as home prices have become less affordable. A third trend that we're seeing right now is that home price appreciation has continued to cool off. Based on preliminary data from NAR, the median home sold price during the past 4 weeks ending August 29th rose at a slower year-over-year pace of 14.9%. That's a slowdown from the 20% price appreciation during the 4 weeks ended June 13th. In fact, as you can see here on this graphic, sales prices have been on a slowing trend since mid-June of this year. On top of this, the sale to list price ratio has also tapered down to 99.5%, which means that homes have been selling for 0.5% below the seller's asking price on average. In both June and July, the ratio was over 100%. However, I feel it's very important to point this out that 99.5% for a sale to list price ratio is still very, very high. This is higher than any other month compared to 2020. A fourth factor that is a sign of a housing market shift is an increase of housing inventory this year. So for example, housing inventory in the US has increased for 5 consecutive months according to the National Association of Realtors. I also noticed that Redfin recently posted that housing inventory has increased since March of this year, but more recently it has started to flatten. Despite this, the number of houses for sale is still down about 22% from a year ago. When you compare this year to 2019, it's even a bigger difference though. So at this time in 2019, there was 1.1 million homes for sale, and now there's less than 700,000. In other words, despite an increase of inventory this year, it still pales in comparison over the past 2 years. A fifth trend that our real estate market may be slowing down is due to the fact that home tours by real estate agents showing houses to home buyers has been declining. According to home tour technology company ShowingTime, from January 1st to September 7th of this year, home tours by real estate agents were down 1.8%, compared to a 24% increase from last year and a 7% rise in 2019. If the number of times that real estate agents show houses to their home buyers, if that number actually decreases, that could mean that home buyer demand is also decreasing. Now keep in mind that housing inventory in the US has increased almost 30% so far this year. So if buyer demand was still super strong, one would assume there'd be more home tours this year compared to the prior years. But that did not happen because the number of home tours by real estate agents actually decreased so far this year. So you may be asking yourself, is this the next housing market crash, or is this a small blip on the radar? Let's discuss. So what I personally look at is how the trends we're seeing today, how those compare to 2019, which was our last normal housing market. I think all of us would agree that 2020 was completely an abnormal real estate market. Let's first talk about the prices of houses that have actually closed escrow or have sold. So the red line here represents 2021 and the gray line is for 2019. As you can see here, the trends are very similar. Prices went down in January and February, then increased through July. Now they have more or less plateaued. If prices went down for more or less the remainder of the year, that would be what we normally would see. This is obviously completely different than what happened in 2020 when prices increased from June to the end of the year. In addition, asking prices of houses listed for sale have also followed very closely to 2019, but there was a very big difference here that I noticed. So in mid-May of 2019, asking prices dropped fairly dramatically until September. However, in 2021, which of course is that red line, they decreased but not as sharply as 2019. We can see very similar trends this year compared to 2019 when looking at pending home sales, where pendings actually increase January through June of each year. We also can have a look at days on the market, which means the time period from when the home is listed for sale until when the seller accepts an offer from a home buyer. So days on the market increase in January and February over the past 2 years. And now the trend this year is following closely to what happened in 2019. So in my opinion, what we're seeing right now with a slight cool down of our housing market is what we normally would see in a normal housing market. It's entirely normal for a housing market to settle down for the second half of the year, especially as we approach the winter months and the holidays. However, what's going to be very interesting to see is how the housing market is going to react once the Fed begins their tapering of purchasing mortgage-backed securities. This is because the Fed recently announced that they may start tapering later this year, which could cause mortgage interest rates to increase. But with a negative August jobs report, plus the rise of the Delta variant, that could delay the Fed's plans in doing this. Please subscribe if you haven't done so already, and I'll definitely keep you posted. So check out the link below if you want a real estate agent referral from virtually anywhere in the US. Check out the link below. Also, if you got any value out of this video whatsoever, this video literally took me hours to make, so I greatly appreciate it if you hit the like button. Thank you so much for doing that. Also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day, and I look forward to seeing you on the next video.